Hi everyone, welcome to Trade Guider Systems and TradingTheMarkets.com VSA Club live trading room. My name's Gavin Holmes. I'm the author of Trading in the Shadow of the Smart Money. I'm very pleased to be with you today, and I'm joined by Steve Phillips, who's broadcasting live from just outside Las Vegas in the United States, and I'm broadcasting live from the New Forest National Park in the south of England, a place called Lymington for those of you that know it. And today we're covered in fog. Can't even see anything out my window, so yes, it's a pretty miserable, dank January day. It's the first day, full day of Donald Trump's presidency, and we're going to look at what the markets are doing today. I have had 4 alerts so far today using the Trade Guider Smart Center Pro system that we use for our hedge fund, and we're going to be using that all week in the trading room with you. The purpose of the room, not just to trade, but to educate. That's really what it's all about. So if you've got questions, don't be shy. We're here to help you. Between Steve and I, we've got probably 30, 40 years experience of trading, and we're both experts in the volume spread analysis method. We've also got Danny Eunice from Australia who's with us, but it's very late out there, so I won't drag Danny in because he's just done an hour's worth of setting the scene in the VSA Club event that he did earlier today. So what we're going to look at today is obviously live charts. I'm going to be trading Forex and futures. Steve's trading mainly futures, but we'll also look at some stocks as well. I know Steve's been following several stocks that have got quite interesting principles on them. Now, before we start, Trade Guider Limited is a registered company here in the UK, obviously, because we run a fund. I want to read a disclaimer to you. Trading stocks, options on stocks, futures, options on futures, and retail off-exchange foreign currency transactions, Forex, involves substantial risk of loss, and it's not suitable for all investors. Past performance, whether actual or indicated by historical test of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guider Limited is an authorised representative of Forex Max Limited, and we're regulated by the Financial Conduct Authority in London, number 229906. Okay, that's the formalities out the way. Let's go and have a look at what the markets are doing. Now, I'll start off with the Australian dollar because here's what Smart Center Pro so far today has identified. So it's already identified trend alignment here on the, this is for those of you who don't know what this is because you're new, this is our hedge fund management software that we launched in October at the Chicago Mercantile Exchange. In fact, just to be a bit pedantic here, we launched it at the CME building. Let's just get rid of all that. That was where we launched it at Chicago in the CME Group Exchange, where I traded my live account in front of a large audience, and we officially launched this fund management software. We're one of the very few educators to be invited into the exchange and to actually trade, and the reason we were invited was because the software we've developed is a very serious piece of software for serious traders and investors, and that's exactly what the CME are trying to attract, is very serious traders and investors. And in fact, here we can see today nothing else is aligning. Everything is very, very choppy today. You can see all of these instruments. There's a lot of grey boxes. Now let me just explain what the boxes represent. They represent a time frame, and those time frames start, for me, these are completely customizable if you own or you're leasing the Smart Center Pro, because we do lease this now. But personally, I start with these time frames. These are the ones I use for trading futures, and I trade slightly differently in Forex, but still similar principles. So where you see W1 here and a color red, that's the weekly time frame. So it represents a weekly chart, and it's red, which means it's bearish. On the 8-hour chart, we see here a green box, which means it's bullish on the 8-hour. The 4-hour chart, which is 240, M means minute, 240 is the number of minutes. So that's a 4-hour chart. It's grey. Okay, that means neutral. It means it's in congestion. 60-minute chart is green, so it's aligning with the 8-hour chart, but everything else on the smaller time frame, the 15, the 5, and the 1 in gold here, is all mixed. So I call this the Christmas tree. And what the Christmas tree means, right, where it's got different colours like this, is don't trade it. It's in congestion. You're going to get stopped out. You will get whipsawed if you try and trade into this. So don't trade it. Not worth it. You're not going to make money on this. It's going to, if you do, you've been very fortunate. But in my experience, sometimes it's very, very easy to to take trades when they're not there because you feel you have to be in a position. But that we won't do that in the live trading room. What we do is we take the trades that are there, like the Aussie dollar trade is definitely appearing. It's not set up yet, but it's appearing. And I've got my trigger number here, the green line, which you can see, all right? And that's the only one today that's in any sort of real alignment. And even then, the 1 minute and the 5 minute are still, the 5 minute is still negative. The 1 minute here is still grey. Now, what I'd like to see is this start to push up and this turn green. Then we will be very, very, very excited because there's going to be a trade setup coming. Now, looking at the others, if you want to just very visually quickly look at that instrument, left click here in the box, and it brings up what we call the VSA scanner, which is separate to the Smart Center Pro, but the two work together hand in hand. Here is the scanner. Now, what we notice here, it represents the time frame, weekly, daily, 240 minute, 60, 15, 5, 1 minute chart. We can see on the 5 minute chart here, 25 minutes ago, if you left click on the indicator number in the scanner, it tells you there's a test, right? We know the test is in a rising market because everything else behind us is green. However, strength, when it appears on down moves. Look at the high volume here, closing in the middle with the next bar up, right? That's buying. Okay, you can see the buying because it's pushing higher. Okay, so we know there's buying present. When there's buying present, we want the change in behavior to come, and this is where it starts to happen. If we watch the 1 minute time frame now, and let's watch it together, we're going to look here if this simple test on the 1 minute chart turns these boxes green. So we're going to watch to see if they change, and I'll just sit with this for the moment so you can see how it works live. And exactly the same thing's happening, funnily enough, in the Forex market. We've got the same type of setup coming in. Same thing's happening as well in the Aussie CAD, the Aussie Canadian. That was also a trade alert. Okay, and I'll just flick over to that quickly. Okay, can you just tell me when you can see the screen of MT4? Can you just tell me when you can see this? This is the MT4. It's still the Aussie dollar, but it's now the Aussie Canadian. Can you all see this? Yeah, okay. So here again, you've got everything here. This is where we took the trade. You can see here very clearly. Let's put up Smart Center Pro, just bear with me. Okay, so let me just bring up the Smart Center for a second. Okay, I'll just bring that over to the left here. Okay. Okay, so you can see here the principle. Now, first of all, we notice the volume thermometer, which is at the bottom, which measures bullish, bearish volume, is green. The diamonds are green. You've got a reversal right down the bottom here, stopping volume, widespread down by the market stops. It begins its up move, and bullish volume is increasing, but not excessive volume, okay, on the up bars, and on the down bars, decreasing volume. And that's what we're seeing here. Then here was the entry. No supply, no selling pressure in the market. The next bar was the confirmation bar. Okay, then we go up. We have a little bit of no demand, but there's no selling pressure in the market. And that is why it's making a secondary high here. Okay, so that's the other situation that we were in. That's the Aussie Canadian dollar, just to be very, very clear. All right. Now, again, that was alerted in Smart Center Pro about 40 minutes ago. That's a 5 minute chart that you're looking at there. All right, and you can see there that everything's aligning in Smart Center Pro. Everything's green, green, diamonds are green, signal is green, everything's aligning. That's exactly what you look for. This is not complicated stuff. Seriously isn't. There is no rocket science here at all. Okay, we're not trying to bamboozle you with stuff with all different numbers and all different things and all, you know, it's very straightforward. When strength appears, it appears as the market is marked down, especially when you see the narrowing of the thrust, which we saw here in this bar. Look, narrow spread, close up on the top. So we got high volume on a down bar, closing in the middle. We come over here. We test that very same level where the big volume was. Now the volume is much lower than it was over here. You can see here and again here, look, very low volume. So they test it again here. Market responds to the test. It rallies. It encounters some supply, some selling, which is why we have a red signal. The volume is exceptionally high on that bar. So that's a warning sign if you were long to either protect your trade or close it. The market's marked back down. Biggest volume of the session. We come in, close in the middle, they shake out the market, move it up, 2 higher closes. Now we want to take out this level here, which is where the black line is. And we want to see if the 1 minute chart turns green. And if you look at Smart Center Pro, you can see it has. So over here, what we're now looking for is that red box to turn green as well on the 5 minute chart. That could take an hour. It could take 15 minutes. I don't know. We can't know how long it will take to change its behavior. It'll take a little bit of time. Pavel, good question. Where was the initial stop loss on the Aussie CAD? Good question. Initially, I always put a stop loss 119 pips from my entry. Now, that's just a personal preference. And it goes along. I'm not going to explain why it's exactly 119. It's a very wide stop for Forex, but I'd always use that particular number because I tend to swing trade in Forex rather than scalp, whereas I'm more of a scalper when it comes to futures. So once the market moves in my favor 20 pips, I move the stop up 10 pips. So every time it moves 20 pips in my favor, I move the stop up 10. And I keep going until I get to the break even. That's how it works. Having a nice cup of tea here. Okay, so I'm just seeing now if this 5 minute chart will turn. And remember, what we're looking for here on this 5 minute chart is any testing or any low volume down bars as the US market's open. If the market refuses to fall, then of course it can only go in one direction. It's going to go up. So I'm going to focus on this chart just for the moment, because it's something happening, as we can see. And you can see here on the 15 minute chart, we had a test as well. Now remember, with testing, it'll be on down bars. That's why the market falls. That's why we have these moves down. So the 5 minute chart is the only one at the moment that is not in alignment with these other time frames. Okay, let's look at the bigger time frames on this and see what we're seeing. Well, of course, if we go to the big time frame, first of all, you can see where we're at. We've come up, we've made some new highs. All right, we've come up, we came down, we had a reversal bar here. And this next bar here is on very light volume at the moment on the 4 hour chart. Daily chart is clearly in an uptrend. There's no doubt about that. We've broken this old resistance line. Okay, we've got a little bit of no demand that came in on Friday here. Okay, but nothing to be too concerned about. Weekly chart has been going sideways, so it's had 4 weeks of upward movement with no excessive volume, which is a good sign. 60-minute chart, well, you can see where the buying took place down here. They shook the market out at this old level. Diamonds are green, which means it's been marked up. We've had 2 up bars, and now we've got a down bar with an increase in volume, which is what I like to see. I'd like to see this push up and close up near the top. That would be a spring bar. That would be a very good bar to the upside. 15-minute chart. Now we've seen that test. Okay, so they're just testing this level at the moment. There's a lot of volume on this up bar. Okay, so they're not ready to take it up yet. If they're going to take it up, it's not ready yet. But it is into this old area here where it found a little bit of support. The real support is down here though. So it could come even down to here at the moment. But at the moment they're testing this area. So we'll see where this next bar closes in the next 7 minutes. I'd want it to close up level with the test bar. If it doesn't, that test will have failed, which means actually the price could actually push lower. So we want to be careful of that. The 5-minute chart, well, we've seen the same thing, haven't we? Very high volume on the downside, closed in the middle, next bar up. That is a shakeout, but that needs testing. So this at the moment, typical Monday trading. Often referred to as whipsawing. Okay, let's have a look at the 1-minute chart. Nothing obvious. Let's just go back over to the Forex chart for a second. Just see where we're at. Actually, let me come back here. I've got an alert just come in, actually. Just bear with me. Let's go to the NASDAQ quickly. Yeah, that's what I thought. Okay, so the NASDAQ, we can see here, massive up move on very high volume just at the open here, which isn't totally surprising, but I'm expecting a corrective move in this instrument because of this. That is a trap up move. Now, it's likely to push higher to the top, but if it goes up there on no demand, that's massive volume on this bar. So just be warned, tomorrow we could have a corrective move in this instrument. Yeah. So that the NASDAQ, again, if we go to the Smart Center Pro here, everything's aligning. Okay, so we've got green, green. These three are all green at the moment. I'll just put a little cross in here, which is manually searching, because these two big time frames are in congestion. As we can see, they're grey. That's not a good sign when they're grey. A couple of people are saying look at the British pound at the moment. Okay, so let's have a quick look at the pound. Well, it's starting to align. I mean, you've got 1, 2, 3, 4, 5 trend alignments, which is correct. You've got a buying climax on the 60-minute chart, though. Just keep that in mind. It's no demand. It's up thrusted, another buying climax, and no demand. Ooh, 60-minute chart. Let's go and have a look. Not sure I'd want to be long with all of that around me. Well, very interesting. They're marking this up. But I mean, there is a lot of volume on this bar here, which is the buying climax. It's gone back up on no demand, but it's failing to respond at the moment. Maybe the spot Forex is more in alignment. That's potential. But I'm looking at the future at the moment. Let's have a look at the 15-minute chart. Yeah, there's not a lot of movement in this. I mean, it's really in fairly narrow spreads, look. I mean, you're not going to make a lot of money in these moves. You'd be struggling. I mean, because look, in the last hour, we've had a down move, then we've had an up move, and now we're in this range-bound bar. Very typical Monday. See, now the 5-minute chart has got some supply present here. So they mark it up at the open into this area here where there was more supply. That knocked the market down, and we're back into this area. So it is possible. Yeah, you see we've got the Aussie still firing off the long trade here. Just chopping around at the moment. It needs to take out this line that I've got. You see where the upthrust is here? That's where we've got to wait for. Just be patient. Wait for it to push up through here. At the moment, it's just whipping around. There's no trade here at the moment. Just wait. Just wait. Pound, I'd say the same. I'm not. That is just horrible. Look, green, grey, green, red. Look, that's just chop city. I mean, if you're going to take a trade, have fun with that. That's horrible. That's horrible. That's not. I mean, they're all looking a bit like this. Look at this euro. Goes up, back down, back up, back down. I mean, the Dow. Well, again, see where the weakness is in the left here, the supply. They're now bringing it back up. So all in all, quite an interesting Monday. Mondays often set the scene for the rest of the week. Remember, this is the first full day of the Trump presidency. Now, that's obviously going to be very interesting for the market in its own right. So we're going to see this type of activity where we're going to get these mixed messages from the market on a Monday. Sometimes Mondays are absolutely brilliant to trade, and other days you can't find a trade. The only thing, as I say, so far that I'm seeing in the futures market is potentially this Aussie dollar with a rally up through this level here. So there you've got your shakeout. They've come back down. They've tested that shakeout. So they're testing that level. Very high volume on the test bar though. It's got to take out the top of this bar. This is what I call a trigger number. Okay, so if I left click here, there's the shakeout and there's the test, right on the top. So look, that bar there is your first bar. This bar there is the second bar, right? So what you want to see now is this change in behavior with the market rallying away from these bars, changing behavior, meaning the diamonds turn this color, and then you're looking for testing of those. That test actually failed at that price. This test was green in an uptrend. It was a test. It went up and then slammed down. That was what we call a failed test. And that's why it's a lighter shade of green compared to these two where they were solid. Because here, the price closed higher on the next bar. Here, the price closed higher on the next bar. So there was an effort to support the market there, but the volume is very, very high. And markets don't like that. They'll want to test that level. Okay, so I've got some alerts come in on Forex. Let's just put these up for you so you can see them. Okay, so you can see the Euro Canadian dollar and the Aussie USD, both of them triggering longs, not trades, just trend alignment on these platforms. Okay, so Aussie, Euro Canadian, you see the daily, the 4 hour, all of these green. The only two that are not in alignment are the weekly and the 1 minute. And again on here, the Aussie as well. All right, let's go back to look at some indices then. And we'll go through all of these markets now and see what we see. So we've already done the Aussie dollar. We know there's a shakeout. We know there's a test. We're waiting for the market to change behaviour. No trade there yet. British pound, chop city at the moment. Again, wouldn't want to be doing anything here on this instrument. Nothing. It's moving in 3 or 4 tick range. Waste of time trying to trade it. Canadian dollar. Very nice downtrend as we can see. So it's pushing lower on all the big time frames. 60 minute just starting to turn. That's your 4 hour chart. There's your no demand, and it's starting to push lower on the Canadian. So let's put that up on Smart Center. The 6C. Now, again, this is very close to potential shorts. Notice, look, the daily still isn't turning, but the 4 hours turning. You've got no demand here. So I'm going to manually set that for a trade. By doing that, I'm not waiting for all of these to turn. I'm just saying if any sign of weakness appears on any time frame, alert me. We just had an alert on the NASDAQ, 1 minute chart, a test. See here, it's flashing. And that's where it came in. So there was the test. Let's see what it does on that test. Okay, so let's wait till 9 o'clock and see what this test does, and see if it pushes above these levels. Now the Aussie's starting to move, so I'm going to keep an eye on this, because this is where I've got... This is the one that's setting up today at the moment, the Aussie, on both Forex and in futures, which is interesting. Okay, I'm going to put Smart Center back on here. Okay, so there was the trade alert on the 5-minute chart. That's what it picked up, the test. I'm now going to reset this for scanning. Okay, so now...
to the upside has arrived.
Okay, so we'll reset that. In fact, I'll reset that again so you can listen. So what it'll pick up is that trend alignment is on all of the 4 major time frames. Okay, so I got filled there at 67, which is where I had my order, just above this link. So we'll now see where we go to with this. And I'm also filled in the Forex as well.
Trend alignment to the upside has arrived.
All right, so we just follow this through now. So far, the three Forex alerts, 1 futures alert. Very standard for a Monday, by the way. When it's moving like this, very standard. Timothy, when you're looking at trades like this, you're looking for no supply here. After you've got shakeouts, you want to see tests. There was a test. That would have been a place you could have gone long on the next bar, but I was waiting for the area here. Okay, see where the breakdown was. This is where the market broke down previously. So I've marked the close here of the upthrust bar, projected it out. It broke out once and come down. Now look here, high volume here into this area. Now, what I want to see now is the market recover and test this level and then bounce up to around 76, 77 for a 10. You're not going to get a big move today, I don't think. I think it's going to be a massive move. I think your best days trading this week is going to be Wednesday by far. We can have a quick look at the calendar as well to see what's available this week to trade. Let's get rid of all this. And if we put up Bloomberg calendar, which is what I like to use, what's the one I like to use anyway. So we can see here today, nothing much going on. And then tomorrow we've got the Red Book, and you've got the manufacturing index, and you've got the bill auctions. Here you've got the petrol. But then really the big stuff is going to come on Thursday, Friday. I think Wednesday's when they're going to set themselves up. So Wednesday's when you want to be watching the market very, very closely for certain. And then we can see what we've got Thursday and Friday. Prince, hopefully that's just answered your question. Why did I put the trigger there? Well, because of what's in the background. You see where the market came up, broke down here, boom, came down, buying came in, back up to that same level. Look, they forced breakout here, back down, big volume here on this down bar. They tested it. Now you've got big volume on this bar, very high volume, closing up on the top. This next bar, we want it to close higher than the close of this bar. Otherwise, it's just telling me they're whipsawing it. And if they're whipsawing it, sometimes you can't trade it. Sometimes you have to step aside. Sometimes you just have to accept that Mondays can be a complete waste of space. Sometimes they are. Sometimes you've just got to be a participant on the sidelines by watching and not trading it. I'm actually in some Forex trades because they are moving. But the futures market here in the Aussie is very, very choppy at the moment, and it looks to me like it's trying to set itself up. Okay. I've got my stop just below the shakeout bar right here, right below the shakeout. And again, if it stopped out today on this one, I won't take another trade on this instrument. I won't bother because it's just whipsawing. Yeah. If it pushes up above the top here, though, I may add to the position. So I may add 3 more lots to it because if it responds to the strength on these bars, it's responded here. And you can see it's the only one of all the instruments, apart from the NASDAQ, it's the only one that's actually giving any sort of alert. The rest are all in congestion, which is a bit of a clue as to what the market's telling you. Yeah, so this is the only one that seems to be moving. Hello, Lance. Nice to see you, mate, and thank you for that. Appreciate it. Okay, so you can see the trigger number here, which is the line that I've physically drawn. You can see how it rejected it over here. They pushed it up higher once. Now they're trying to push it up again. See, it closed below here on very high volume on this bar, massive volume. Right? Now, that's an unusual bar. That's not a strong bar at all. Having said that, that's a strong bar and that's a strong bar. So they're fighting. It's a battle. If the bears win, we'll see a lower price down here. That'll be the end of the trade for me. If the bulls hold out, we'll come up here to this old top here. And that's where it'll get interesting. That's where this will get very, very interesting. Yeah, oh no, I'm monitoring the crude oil as well, but I'm not trade oil. Tim, I mean, we can get Steve to look at crude oil for you. I'm not trading crude because I'm only trading a $5,000 account here publicly. But on the big account, we do trade. Of the 2 big accounts, we do trade crude, yes. But Tim, we'll get Steve to look at. In fact, Steve, could you just make a note? Could you look at crude oil as well? I know we've got quite a few crude traders that are in the room. But yes, you can scan any instrument with this. Yeah, so I'm just looking down at the other Forex charts here as well. And they're pretty much the same. Yeah, Pavel, this isn't a trap up move necessarily. You know, because what you've got here, trap up moves, you don't usually expect to see shakeouts in the background. Trap up moves usually happen after you've got serious weakness, like an upthrust end of a rising market. This is why it's not making a lot of sense at the moment. You know, I've taken the trade because I'm looking for the breakout, right? And many times when everything's aligning like this, you can see the 1 minute, the 15, the 60, it will break out to the upside. If it doesn't, I've got a very small risk because I've got the stop just under here. So it's a very tight stop. Yeah, it's like 11 ticks, very tight. Not letting this run against me because it's quite a risky trade. I would grade this. I grade my trades 1 to 3. 1 is high probability, 3 is very risky. This is a 3. Could go either way. It's a Monday, you know, it's a Monday. It's a very typical Monday. Very rarely do we take trades on a Monday anyway. Now, Forex, we have got some trades set up, but I'm focusing in on this one because I want to show you the alert, and if it does break out, the change in behavior. This 5 minute here, which we're watching, we're looking for this diamond here to turn green. That's what we're looking for, and it's just a matter of being patient. And at 9 o'clock, if they're going to do it, they're going to break this out in the next 3 or 4 minutes. Won't take long. Yeah, Pavel, I can see that in the Forex market it's slightly lower. It is. That can happen. That can happen. They can position themselves in futures before they move into Forex. You can get a bit of a clue. Now, this is where if it's going to break out, this is where it's going to happen right now. All right, at 9 this is 3 o'clock UK time, 9 a.m. New York time. See, if that was a trap up move, you wouldn't expect the next bar to react like this. Now, a little bit of no demand, right? Low volume on the up bar. That to me here, that doesn't make sense. They're going to mark it up to here. This is where it's going to go, almost for certain. 0.756. When it gets there, it may well stall out altogether. But the reason that this was a trade, it's the only one that sent an alert from Smart Center Pro in futures, apart from the NASDAQ. That's a shakeout, followed by an immediate test of the shakeout. That would have been a better entry in hindsight, but I wasn't at the desk when I was looking at that. Okay, so that would have been a good entry because actually all the bigger time frames were in alignment. Just have a quick look at that NASDAQ, by the way, just see where it went. And you can see here, they marked it right the way up after the alert came out, right, which was just over here. They marked it up again. So they tested it, marked it up, straight back down, and now it's in no man's land. So if the NASDAQ starts to fall now, back into this area, then this Aussie will break out. Sorry, I meant 10 a.m. New York. Did I say 9 a.m.? Yeah, it's 10 a.m. New York time. Yeah, 10, that's what I meant, 10 a.m. This is 1 hour from the London fix. Now, the target here is 0.7576 is where my point and figure projection put it. If it breaks this, then it will be a running trade. And again, I'll stress, the only trade that we've seen today in the futures on Smart Center Pro. What I'll say to you about Smart Center Pro, as you can see here live, it picks out the highest probability ones when they move. You've still got to use a stop. You've still got to manage the risk. Nothing changes there. All right, now we've actually almost hit the top of this bar. This is the key level now. We've got to see an increase in volume and push up to the 76 going through now. So now we've got the runner. Now what it needs to do, I need to see this volume increase. It's hit the target. And as you all know, first things first, stop to break even. Now I'm going to let this run. I'm not going to even move this stop. If it stops me out, fine. Because I'm making money in the Forex, so I'm not concerned. I'm going to see if this runs now. If I can get $200 out this trade, I'd be more than happy with it. But we are now at key resistance. So if it breaks this resistance, it means it's bullish. And the volume's coming in to support my theory that this shakeout is enough to push this price up. Let me just have a look at the Forex trades as well, just to make sure they're running. Okay, I'll just bring that back over here. So I'm sort of hedging in the Forex market as well, as you can see. So here, of course, was the entry, no supply. Okay, there's the entry, and you can see we've pushed up on an increase in volume here. Sorry, decrease in volume, so a little bit of no demand. But if this tests this level, that'll go up another level. Okay, now what I'm going to do here, and the same here with the Aussie here. Okay, so far today, Smart Center Pro has picked up four trades. The 76 level is now the level where it had it as resistance. So we'll see if it breaks this resistance. And this is the only trade, as I say, that we could see today. Graham says, what time frame did we use for the Aussie trade here? I was using the 5-minute chart and the 1-minute chart here. Here's the 1-minute chart, okay, which confirmed the 5-minute. The highest volume was the 1-minute was here, where the trigger is. Okay, down here is your stopping volume confirmed. They bring it back down here. They test that level. Okay, and you can see everything turns green as we break out of this old top. This is the area here that now, I mentioned it to you earlier, this could stop me out because we are at a serious resistance line here. But if it does break out, it will be a very strong trade to the upside.
Sign of strength has arrived.
And there we go. So they're testing it now. And you can see there, Smart Center Pro now is saying, of all the trades that are here, that is the one. Now, again, tests can fail. They can succeed. If this succeeds, we'll break the 76. But that really, if I was trading 10 or 20 lots, I would have taken my profit at that level. As it's only one lot and it's Monday and I'm doing well in Forex, I'm going to just let this run. If it comes back down and stops me out, fine. Okay, I'm not going to lose any money on it. If it doesn't and it runs, it'll be a very good trade now for no risk. The only risk I've got is my my commission, which is nothing on one lot. Lance says, every hedge fund wants to sell the NASDAQ, so I've got to take the other side. Be careful. The NASDAQ does look like it's vulnerable. I mentioned this, Lance, at the beginning. The S&P and the NASDAQ look very, very vulnerable. Just be warned. So this level now, it's actually at this level. At the 76, it came to the tick, look, exactly there. So this is very important where we're at right now. Because that 76, I mentioned that was, you know, I'm in at 67. So I got 9 ticks out the trade on a Monday, which most people would have been happy with. I'm taking a little bit more of a long-term view of this today and saying, well, if it breaks 76, it's going to go to 7600. So it's going to go to the round number, which would be a much better trade. But because I'm now at a situation where I'm at a break even, I'm not worried. Not concerned. That's how you should trade. That's how any trader should be, is once you've got that stop to break even, whatever happens, if you're stopped out, you're not going to, you know, destroy your capital. If you're right and Smart Center Pro is right, then this test, if it succeeds, will break out. And there it is for yourself live. You can see it for yourself. You know, I love showing stuff with PowerPoints, all well and good. But you know, everyone says this stuff looks great in hindsight. We've been doing this in foresight since October with Smart Center Pro, and that's why all of a sudden the big banks are suddenly taking us very seriously. Because when we were selling a piece of software for $3,000, we're not serious. Smart Center Pro by the end of March will be at $50,000. Suddenly the big banks are like, crikey, you've got something that works. Well, of course it has to work because it's based on supply and demand. But you've still got risk. I keep saying this to people. The email that came in yesterday from Phoenix Investments, guys, I know you're in the room. As I said to you straight away, I said, look, it doesn't. This is not a buy-sell signal system on its own. You still have to use the human brain to put your stop in and manage your risk. Now, are we automating that? Yes, we are. We are, because you take the human being out the equation, you probably end up with a very good trading system because the human being is the weak link in trading. The emotional responses, the you know, all of those things cause traders to lose money. Well, I'm just following some simple rules. Look, nothing else here is, apart from the NASDAQ, right, which has turned red here. And again, I'm going to just restore that, right? All of these, the rest of these are saying there's nothing here today, Gavin. That is telling me there is something here today. And there is, and there has been. I'm just going to restore this now. By the way, to restore it, what it does is it removes the indicator in the scanner, so any other indicators that appear on the bigger time frames will now warn me. So you might get another trade down the line if the market pushes lower.
Trend alignment to the upside has arrived.
As you heard there, just left click in the black box, guys. For those of you that are using this, it automatically now sets the scanner to look for long trades. If you close it, it's still working in the background, as you'll see. If we get a principal appear in the time frame, it will come up and warn you that that's there. Let's have a quick look at the NASDAQ, see where that's going. Yeah, that's pushing down. You see that? Now that's ugly. Look at this. That is selling pressure in the market on the NASDAQ. So the NASDAQ could well start to roll. Look at this. And if the NASDAQ pushes lower and there's a climactic bar, then this Aussie will want to break out. Steve, I'm going to bring you in about 5 or 10 minutes. So if you could look at gold.
Sign of weakness has arrived.
Okay, so we've now got on the CAD a sign of weakness, which is what I was looking for, funnily enough. Let's have a look which time frame that was in. Aha. All right, I'm going to put an order right below the upthrust bar. Right below that upthrust. So let's just see where that is. Let's put again, I'm going to use a resting order here. I'm not going to go in at market. So it's about 75120, okay, in the CAD. So we'll put it under here and just make sure. Okay, that's in. Okay, so this is not run at all. So it's gone right up to that trigger where the upthrust was. They're not ready to take this up yet by the looks of it. So let's see where we're at. So I've got 3 ticks away here. I'm not going to close it. Let's wait and see where we're at. Stick with, you know, once you've stuck with it, once you're at break even here. That's right, Gillian. Buy the election, sell the inauguration. That's about it, isn't it? Yeah. So we're not doing anything at the moment. We're holding our level here on the 1 minute. 5 minute chart, we've got some weakness where we'd expect to see some weakness. Right, a little bit of weakness here. It's come down. Now what we want to see is a test here. That'd be ideal. We get a test on the 5 minute chart and we've got 2 minutes to go here. If that test responds, we go back up. Steve, if you end up taking, okay, so I just got stopped out. It's not going anywhere. So let me just show you there. Sorry, I didn't get stopped out. I got filled on the Canadian. Okay. Okay, so we're still at 67 on here. Let me just check. And I'm also filled on the CAD as well. So there we go. So let's have a look at the Canadian dollar. So we had the upthrust here in a downtrend. In the background, we've got the no demand, we've got weakness, and we've got weakness here. 15-minute chart, a little bit of, well, it's fallen, and they've tried to support it, and then it's gone up here, very low volume on this up bar. So now we want to see the upthrust here, and it continue lower. Now, if we put Smart Center Pro up, you can see the 6C came up with the alert here, the upthrust, which is a serious sign of weakness. Now, what we want to see now, well, just watch this, on the 1 minute chart, is everything to turn red. Yeah, Stephen, that's exactly why that level I gave earlier was so important, that 0.7566 level. Very key. So, 15-minute chart confirms the 5-minute chart. A little bit of weakness here on this bar. 5-minute chart, so you've got your upthrust. The next bar's closed lower, which has confirmed it. So we've got to now see the change in behaviour on the 1 minute time frame. So we'll watch for that. Very, very, very bitty day, by the way, from a trading perspective. It's not, the markets aren't really trending. They're not really moving. This is a very typical Monday, I think, because of the inauguration Friday and then today's first day of Mr. Trump. I think people are sort of getting used to that. Okay, so this is not reacting on the Swissy at the moment, on the CAD, sort of pushing up a bit on no demand. Aussie dollar starting to break out, so we'll focus on that for the moment and see if we do break the 76 level. Yeah, one lot on the Canadian's $5 a tick, Steve. $5 a tick on the Canadian dollar. So for every tick of price, it's $5. So here on the 5-minute chart, if it pops up, you can see there's where the short was. If it goes up on no demand into that bar, yeah, then we'd look to lower it, and then you'd add to the position. Fitzroy, yeah. Whilst this software, the Smart Center Pro, is aimed at banks and institutions and professional traders, we do have options to for leasing for existing customers, monthly payments, quarterly payments. Absolutely, yeah, because we realise, you know, and it's not 50,000 at the moment, by the way. It's currently retailing at 25, but we've got new features that are going in it over the next few weeks, which will increase the power of it. It's powerful already, as you can see. The best person to talk to about that is my wife, Laura. And if you email her directly, she can give you a quote. It's just laura@tradeguider.com, and she can check your account. Yeah, she's in the background here on the database, and then she can come back to you with a proposal. So yes, we will make it affordable for you. It's not a problem. So Fitzroy, we will take care of that for you. All right, so we're at the 76 level again. This is critical now, this area. quick look at where the Canadian's at the moment. Going up on no demands, so nothing much there. Let's just restore that for scanning again. So it's still pushing up after this. It's going up on low volume, so we'll see. The one that's working at the moment, though, is what happens here is quite critical, is if it breaks the 76 level. It's stuck on there at the moment, but we do have, this is a test bar. See this last bar, low volume down bar, close in the middle. So it wants to try and take that out. Yeah, Lance, hey, you know, when you got something good, you got something good. This took us years to get to where we've got to with this, but as you can see, you know, it picks up trades. That's what it's there to do. We call it the sniffer affectionately here in the team. We got several guys using it now in the fund, and you can see there's no work to be done to find the trades. It's a question of managing the trades once you're in them. That's why we need the human beings. I mean, I hate to say this, there is development afoot where the whole stock management system will be done by the computer. A sad day for the humans, but there we go. Most robots that they're developing at the moment are doing exactly that. Yeah, we called it the sniffer because our investor who put a load of money into the company, which has allowed us to do this, he when we described what we were trying to develop to him, I said, well, we're trying to develop a piece of software that searches for different time frames in different markets at the same time to find the key VSA principles of buying and selling, like shakeouts, followed by testing, in a trend, so it's in harmony with trend, and then alert the trader with an audible alert and also an email alert, because this sends email as well. And, you know, he said, well, so you're sniffing out trades. That's exactly how he described it. You're sniffing trades out. I said, that's exactly what we're doing. I mean, I wanted to call this the VSA Smart Sniffer Pro, but that sounded not polite. So it ended up with Smart Center Pro. But what it's doing is what it's doing. It's sniffing out trades. And that's what it's doing. Just had another test on the Aussie CAD, guys, just so you know. So you just had another test on that instrument as well. Okay, Steve, I'm just going to stay with this trade because it's come up to the 76 level here. And then I will hand over to you. Let's see what this next bar tells us. I mean, I've got a reasonable amount up the trade so far. The Canadian dollar is 35 down, but I'm still in the trade. The Aussie dollar here, you know, I'm going to bring in 50 bucks here. I'm going to lock in something here because there's no point in letting this run if it's not going to break out here. So always try and take something that'll cover the Canadian trade if it comes off. So I may end up scratching, which is fine. It's not moving. It's hardly anything going. That was a good trade. I should have been in lower, to be honest, but I didn't start my trading day till a bit later. It should have been a bit lower here. But at the end of the day, nothing going on. That's serious resistance. It doesn't want to break it right now. And looking at it, if it does do it later on, if it takes out 76, I'll get into another trade. The whole process here, though, is to make sure... Look, I take a simple view of trading. If I've been in the trade for half an hour and it's not developing, which is a typical Monday, but I've made like almost there would have been 10 ticks in the trade. It took an hour to get there. That's like pulling teeth, isn't it? So don't waste my time. I can go and play golf or whatever. If the fog wasn't here, I'd probably go and play a round of golf or something. Nothing much here today. I mean, Steve will probably be looking at the charts the second half and maybe he'll find a trade. But I honestly think that today will be low volume day. I think Wednesday will be the day. Tomorrow possibly, but Wednesday definitely will be the day where we'll see some decent movement. Yeah, I'm going to be here tomorrow. I won't be here Wednesday. I've got a meeting with the Gibraltar Stock Exchange up in London at Gibraltar House on Wednesday. Again, we're going to hopefully introduce you to a gentleman there who's trading with Smart Center Pro. But then I'll be back Thursday and Friday with Steve. So, yeah. Yeah, Canadian doing nothing. Okay, so but another 6 minutes and then I shall hand over to Steve. Just see if this move, it's not really doing anything at the moment. Let's have a quick look at the NASDAQ. Well, that supply has really knocked it down. To be honest with you, I think what I'll do on the NASI, I'm going to actually manually search for shorts on the NASDAQ today. Okay, so I'm going to manually look. I'm ignoring the trends here. I'm just going to look for up thrusts and no demand bars. That will warn me now. Okay, it's not flashing because there's no trend alignment, right? Which there isn't. You can see it's gone up and it's come down. It's whipsawing. Hello, Mark. Good to see you. Hello, William. Good morning to you. William, I believe you can. Yes, you can sync the clock to the platform you're trading. If you're on another platform, I believe you can do that. Yeah. If you put a support ticket in, AJ will show you how to do that. Yeah, Undredge, the pound might be in alignment in Forex. I'll have a look. Let me have a look. Yeah, it is. It's alignment to the upside and it's just had a principle. So I may well take that trade on the Forex here. So we just had an alert on Forex, the GBP USD to the long side. And let's just put that in here. Okay, all right, we're filled there. So nothing much going on there. Let's have a quick look at the CAD and then I'm going to hand over to Steve. So weakness appeared here, just starting to pop lower. Here was your weakness, your supply coming in. They mark it back up here. And so my entry's still at 110. Okay, didn't touch my stop. It was nowhere near the stop. So now we'll see if this starts to break down. Again, it's in harmony with the bigger trend though. You can see the weakness at the top. You can see the clear mushrooming over of this chart from up top. Look, there's the mushroom. Here's your markup. Okay, put under a little bit of pressure on this bar, but again, look at the volume on it. Now that'll close in 3 minutes. So in fact, I'll hand over to Steve in 3 minutes and we'll just see what it says when it closes on this bar. Because if this is, I mean, if it closes lower than this bar, that's going to confirm the weakness. If it closes above but on low volume, that's even more confirmation. Okay, so we're just reapproaching the entry point where I originally went in. I was under a little bit of pressure on this bar. but didn't get stopped out, which is fine. 5 minute chart, that was the, and see what happens is they do this all the time. They'll up thrust it and then have another go into the top, then they'll collapse it. Now if it breaks down now, that will be the level that will find support at. 1 minute chart shows it nicely. Look, that's where the up thrust was on the bigger time frame. You can see if you look at the level here where the trap up move was, right, it's almost ready to go. So your trigger numbers here are really quite obvious actually. If you look at the top of this bar, right, so just mark the top and then mark the bottom where the highest volume bar is. Okay, highest volume on the day. They bring it up to the top here, rejects it once. They're whipsawing it in here. It's just whipsawing around. They bring it down to the bottom of this bar and they support it once. They support, so it's in a trading range. In a trading range. Right, let's have a look at the 15-minute chart. Let's see where that closes. Got 1 minute to close here and we'll see what it does, and then I'm going to hand you over to Steve Phillips for the next hour and a half who'll take you through. Right, that's what I thought. So it's now come up, look, on no demand. Now the next bar needs to, this next bar has to close lower and you'll get a solid red indicator. That will turn red at 3:45 UK time, so watch out for that. At 3:45 UK time, this needs to have closed below the low of that bar, which is actually near where my entry is at 7.110. So 4 ticks away. If it closes lower, you can expect lower prices. So with that, Steve, do you want to just do a quick sound check and I'll bring you in?
Good stuff. Good morning.
Yeah, hi Steve. So yeah, you can see there, it's a bit like pulling teeth today. I mean, I eked out a trade on the Aussie dollar. I mean, that's the best word for it. Eking out a trade. That was, but it was there. I can't argue with it. I mean, Smart Center Pro gave it. We didn't get the full 10 ticks out of it, but it's sort of sat up at this resistance line and it's rejected it a couple of times. So I think tomorrow and Wednesday are going to be much better from a trading perspective. NASDAQ obviously breaking down because of the weakness. Philip Friston's just texted me to say he thinks that something unusual is about to happen on the S&P. So he thinks it's going to break much lower. So he's looking for shorts on the S&P at the moment. So that'll be interesting to keep an eye on as well. I will be with you tomorrow, everybody. So I look forward to seeing you. And with that, I mean, I'll be in the background here for 5 minutes, but I do have to go to a meeting. But at the moment, I shall let this Canadian run and see if it breaks lower, get the stop to break even as soon as I can. And hopefully, again, I've had a profitable day, but the Forex trades are still running, so they're still going well. With that, Steve, over to you. Have a great day, everybody. Wish you good trading, constant profits. See you tomorrow. Over to you, Steve.
Thanks for that, Gavin. Hope you have an excellent afternoon. Some good trading. Sometimes you do have to sit on the sidelines a little just to let things unfold, let the market come to us. So how's everyone doing? Nice to see everybody here. Good morning, Andre. Good afternoon, Radoslav. Good morning, Lance. Right now I'm watching the S&Ps pretty close. Good morning, Marco. Good morning, Jay. Or good evening, Marco. Is it it's Tuesday for some people. It just turned Tuesday. So I'm looking at the S&P short at the moment. Good morning, Anton. And what I did is I shorted them right out of the gate when they closed. They'll probably get filled here. But I was really looking to get another fill up in here, so I'm most likely going to get filled here. But I was looking to have, if it went up to 2260, I was going to get short some more. Just had a nice move to the downside. And with that said, this 54.75, if it blows through there, it gets down to 2251.75. It closes lower on the half hour of the 15-minute chart. I'll start shorting 54, looking for signs of weakness. In the meantime, looking for a short at 22.60.5 unless it just snaps back and it looks like a shakeout on the half-hour chart. So I'm going to cancel that order. So that one moved rapidly to the downside, and as you see what's going on, we've opened here. They ran it up and then boom, right back down in the middle, and then next bar closed lower, significantly lower. Now we're trading down immediately. That tells me there's going to be a lot of resistance at 22.60 when it gets back up there. So with that in mind, you get a lot of support back in here as well. But with that in mind, look at some correlations. I noticed somebody said they were long gold. That's good stuff because most likely it just popped a little, considering the S&Ps just fell off here. So bottom line, looking for short opportunities intraday wise at 22.60. If it blows through, gets down to 51, I'll look for shorts at 54. Let's take a look at gold, and somebody was asking about crude light as well. Now, look at the short term and the longer picture. It's a bit trapped on the 60-minute chart. As you see, it rolled over pretty good on the 15 as well. Accumulated here, effort to rise. Oops, ran into problems. They just trapped it under this 53.05 level. These are intraday numbers, good for day trading. Considering the S&Ps there's a bearish sentiment at the moment, minus 72 on the Dow. S&Ps have just dropped under some major support, and now it's resistance. Intraday wise, the crude light will be a nice short opportunity at 52.68. If it blows through, it's down to 52.20, gets below that level, 51.80, then that 52.20 will be a good short opportunity. At the moment, you got to respect that there's some support here. Came down for the first time real close to it and bounced pretty well after accumulating at it. So it's going to have to blow through there to be a short opportunity. The breakaway trade would be at that below 52.19. And you would expect it to shoot down to 51.53. So right now, radar is up for possible short on crude light. If it fires off short on Smart Center Pro, we'll look at it closely, and if it's near a trigger number, then I can manage my risk accordingly. I'll look for an opportunity there. So 60-minute chart, that's what it's telling me. There's a trap move. It's back into support. But there's definitely a lot of resistance. 52.68 to 53.05 would be a nice short opportunity. Let's take a look at the weekly chart. Ready to go. There's the daily. It's the wrong one. There it is. Keeping an eye on this S&P price as well. It's starting to, market's starting to recover a little, which is good. I'd like to see it get back to that 60 level, pretty aggressive. And see the ticks are revving up here. It's trading at 56.25 at the moment. What's going on right here? This is a weekly chart of crude light. What's on the right edge on the weekly chart? Just throw it out there. Yeah, it's they're trading zones, Gillian. My key numbers, and they're busy for intraday stuff and less busy for swing trading because they use larger numbers on the swing trades. But it helps me manage my setup, so where a key number, a trigger shows up on a key number where I get a nice principle of either distribution or accumulation, long, short. Then I can enter and exit accordingly to the lines, and then I can put my stop beyond those lines as well. So it helps me manage my setup where I'm at in the playing field. I'm up near resistance, I can look to get short and manage my risk accordingly, and vice versa. So trigger numbers to help my entries and exits, and plan the trade before it happens. Glad that helped. It's good stuff. So it's important to know where you're going when you get a map and start driving. Although it is kind of nice to just kind of cruise around and explore. Sure, we'll take a look at the pound. Yeah, most likely there will be some weakness today on the pound because of the condition of the S&Ps. It's starting to fall apart again. Thanks for that, Robin. Volatility is decreasing. Yeah, a few questions about the pound came in. I see an effort to rise, and they're trying to test right now. There's a bit of a double bottom, push higher, but really what I was getting at is the diamonds are starting to turn up. There's accumulation in the background here, effort to push. The top of this accumulation got retested. If there's a widespread up bar through this level at some point, the trend's going to most likely change. And that hasn't changed since 2014. There is some possible it could drop like a rock back there, but as you see, it changed over here. And crossed and hasn't looked back, and this is the first time it's changed. So something to really pay attention to in there. May come back down and revisit this low in here at 45.85. But at the moment, if it breaks out of this high this week at 54.30 expectation, it's going to fire off and at least challenge this week up in here at 56.02, 56.36. So watch that weekly chart. It looks kind of strong at the moment, and it is the beginning of the week. Let's take a look at the pound. I think it's below here. They got it trapped here on the 60 on the S&Ps. If it moves back to 60, I'll look for shorts again. Which way did it go? It's on the other screen. Oh, no, there it is. It is a nice uptrend. Just got to watch the S&Ps. It might be a bit of a muted move, but it is popping out of there pretty nice. See, it broke through this old top. Let's look back. 30. I wouldn't want to try to get long on this at the moment. 15 looks like there's a little effort to push in here. Trying to get above this. It is strong. Don't get me wrong, it's acting strong. Everything's in a trend alignment up. But it's going to stagger at best at the moment, and the reason being is the S&Ps are looking at intraday stuff here. S&Ps are trapped underneath. Then he moves back to 60. You're going to expect a rapid move back to 54 again, 55, 54, 75. If that does happen, sure, pound will lift a little and then stagger. So it'll go up when the S&Ps go up. Yeah, it's the down in here. Yeah, I see it on the I've never even thought about that, but I do see it here on the data windows. But there's probably a way to put them down here. I try to keep the charts fairly clean with the lines. Good stuff, Lance. Yeah, apply what you've learned and make it your own. As you know, a little discipline goes a long ways. Welcome back, Robin. No, I looked at crude light and talked about the S&Ps a little and the pound. Pound's all set up, looks like a nice long. Let's jump back to the pound real quick here. Then I'll jump over on gold. Got to fix that volume down there. Pullbacks, old high in here, 24.14, 24.17. Yeah, it's a nice confluence in there. Any pullbacks into those levels would be a nice long 123.71 as well. But let's see larger stuff here. Looks like it's a widespread downward. It's a trap, definitely. But it looks like they're building a cause to push. Watch 127.91. 127.91 on the way up. Pretty major resistance. And these old tops, of course. Here, 127.35. So we've got a ways to go. Good 300 pips, but it's a major resistance up there, 127.91 and 127.35. Any up thrusting at those levels would be a nice short opportunity. But that's way up there. So in other words, there's a lot of free sailing going on, and there's a good cause on the weekly chart for this thing to pop to the upside. Good stuff for longs, and it would be nice if the S&Ps were setting up long. They're at the moment, they're trapped. Take a look at gold. No, style, scaling, automatic. That's better. So waiting for the S&Ps to get up about 60. Yeah, that's what makes or breaks a trader. Once you get the mechanics and the setups of it, it's having the discipline to follow through on it and manage the risk accordingly. Once you master that, master yourself, so to speak, yeah, good things start to happen. You can put a little discipline in place when you struggle a bit, so you don't explode or implode. Imploding would be a better word for it. Weekly. There's a trap move on the weekly chart. Looking in the background here, you get this widespread down bar. There's a pivot here, that's why I marked it at 1245. So any upthrusting at those levels, 1236, 1245 on the weekly chart would be an awesome short. That 1211, good stuff. You see I got a trigger at 1211.6 for larger time frame stuff. Least path of resistance, swing trade wise, is down, but it's very possible it could go up to that 1236, 1230 level, 1230 to 1236, and then possibly 1245. So, right now it's on a downtrend weekly chart, looking for some possible signs of weakness on the up moves. Weakness shows up on up bars, strength shows up on down bars more often than not. Here's an exception to the rule, but it's a good rule of thumb. When you see widespread up bars, always ask yourself, what are they up to? Are they going to roll it over and float it around, roll it over and drop it through? Or are they going to break it back down immediately and reaccumulate? So you see the daily charts, they had a little push to the upside here on the resistance, and they came back down and held it. Watch when we get through this high here, 1218.9, 1218.9. If we get, well, they made it today at 19.4. Gold's bullish at the moment, intraday wise, and like I said, it could possibly run to 1236. But anything on the daily chart, don't see anything to hang the hat on saying, aha, okay, it's going one way or the other. Up thrust here, came off back to support. No coincidence these numbers are holding. These numbers have been on here a while. I update them when needed according to accumulation distribution, but you can see the 1217 level, it needs to get through there, and that would show the S&Ps are selling off a little. So as long as the 1210, 1211, good stuff. Yeah, good stuff. Yeah, if the indexes continue their downdraft, gold may pop up to that 30, 35. It's going to have to get over 1217 to really get moving, though, as you see. At 1245 up in there, but there is a technical. You have to, it's gold. Commodities are very attracted to those levels. Something to consider. But definitely along as at 1210, 1211, up to 1217 for a profit. If it breaks through 1217, that's it's going to act as support. It's going to go up there and hold. That would show the S&Ps are selling off there. So right now, a long radar on gold intraday wise. Swing trade wise, I'm kind of just sitting on my hands waiting for it to possibly reject those levels where it trapped. So a little two different mindsets there. Back and forth on the intraday when accordingly, but today I'll be leaning in long. So bottom line, it looks like it's going to go higher, specifically because the S&Ps are about to drop out again. They're teetering here on the tick. You don't have to trade every day. As a day trader, you're trading during the day, just not every day. When I first started trading, I was thinking I was missing everything because the market's moving and I'm not in it. It's like, well, you don't have to be in it. Just take those opportune times. Yeah, it looks like gold's getting ready to pop up here. Watch that 2254.75 and watch gold at 1217. Got gold right here. Dow's trading at minus 65. So hopefully it'll retrace back. A pretty good confirmation on the 60-minute chart that it's trapped. I was keeping an eye on that. We got about 6 minutes left on the bar. Just in case it started to snap back, and next thing I know I was at 62. I just have to reverse my thinking because it'd be a shakeout. But right now it's fairly well confirmed. And the 30-minute chart's doing the same thing. Down, down, down. Data disconnected, data reestablished. Sure, take a look at the euro. Just waiting for some things to unfold here. We've got the Smart Center Pro looking for trades according to market sentiment. And watch that pound. It's not, it's, like I said, it's strong, but it might not really explode today to the upside because of the indexes are kind of holding it back. It's that new, there's some news supposed to drive it, and if that does happen, it's going to move regardless. But always keep that in mind. It's kind of going with against the flow at the moment. Yeah, all right, let's take a look at the NASDAQ as well. Yeah, if the S&Ps get back up to 60, you'd be a happy camper on that if it did the gold thing. If it starts to firm up here. Look at the euro. 15-minute chart, immediately see double bottom effort to push. As you see, support resistance levels, pound's way up here. Euro's sitting on it at the resistance still. Any upthrusting, let's blow it up there. Any upthrusting in here, you'd expect it to push back down to 0697 from 0736. And basically take this bar and put it over here. You would expect it to drop out. If there's a widespread bar through these lows, watch it continue its journey. If it gets down to 0697, it may stagger a bit, but finish up down a little lower. 60-minute charts, nice and green. 30-minute charts just starting to change. It's going to have to get over this level. That would show the S&Ps have recovered, and all of a sudden they're going back up again. Which anything can happen. But suggesting it might go continuous journey to the downside. If that's the case, the euro's not going to explode out of here. You'd expect some upthrusting and a retest. 0697, watch the old low as well. Here, 0705. There's about 30 pips in there. So I like the short opportunities on the euro at the moment, unless things change. Bigger picture, it still looks like a pretty decent short. Up to $9.09. $9.09. 909. 0850. 0850 is the low in here. Only about 100 pips away from that 0850 and 0909. Some pretty major resistance up in there. But it's a bit of a rock and a hard place. Up thrust in here. Expect it to drop back down. S&Ps are coming back and liking that. Maybe it'll pop up here and give me a nice short opportunity at 60. It's coming out of some accumulation into area of resistance. That's what's going on in the daily chart. Not real decisive, but at least path resistance looks down, considering they're right at that resistance level 0909, and you got a technical at 0837, so I like those shorts up in there. But it does look like it should rise up into those levels at some point, just not today. The bottom line, intermediate should rise, longer term picture should bump its head and roll later. Short term, like right now, you'd expect it to trade off a little, considering the S&Ps are a bit bearish. So what I'd like to do is look at where there's accumulation distribution on the charts, where people got put on the wrong side of the market, trapped. Then I look at those areas where they got trapped, and when it trades back into those levels, I take advantage of accumulation or distribution depending on which way I'm going. There's two ways to do it, Jay, and it all depends on the situation. When you're scalping, the expectation is probably going to work within a minute or two or three. If you're lagging into a position, expectation it's going to probably stall out and then give you some signals a little later. And if it doesn't, you can take a ride with it and then add to it later if it's a trend. So it all depends on the situation, but both ways are a good way to go, as long as you don't leg into it so much that you're risking more than you should. When you have a risk set per trade, and if you keep legging in, your stop's too far away. But yeah, both are good ways. The institutions are always legging into things, but they do it within risk. I mean, if you're risking, say, 2% of your account, and you had a $100,000 account, that's $2,000. You start legging in, and all of a sudden you had 20 contracts, a 4-point stop, and probably wouldn't work out too well. So you just got to watch your stop distance when you do that. plan ahead. But both ways, nothing wrong with scalping. But I found that scalping in the gold and crude light and things of that nature, so it was good to wait for those reports to come out and for them to push it into areas where there's a huge amount of orders just sitting on the books. But when it comes to the S&Ps, it's so liquid. Wait for some key levels, some climactic action into those areas. Works out pretty well. So you got to be careful of the market and make sure there's enough volume in there to absorb 10, 20 contracts of a scalp. And if it's kind of quiet in some of those commodities, it's a little harder to get filled. So bottom line, it's best wait for some volatile times to do that. But it is feasible. Yeah, sign of strength on the 15, and the reason being there's a test here. Light volume down bar. Maybe it'll be enough to push it up here. Yeah, that trade's better quality, for sure. Less is more. I've learned the hard way. Yeah, gold may come back just a hair off that 1217 because of the S&P rise. I'm liking this 2260 level. Yeah, it's important to understand where the high and low from the previous day and week are. I clicked on Matrix, but it went to the weekly chart instead. I'm watching this. I got quiet for a second because the S&P's really got my attention with this higher tick for the first time in a while. With the Dow, think of the Dow in the S&P when it comes to points. Every 1 point in the S&P is like 10 points in the Dow. So your equation would equal 32.5 points. 32 or 33. And it would be the same thing. Dow slips around a lot more than the S&Ps. Me personally, I would wait for the long down there at that 1210, 1211, and that's specifically if the S&Ps are retracting up here. Because of the least path resistance is most likely going to be from 2260 down to 2255 and a quarter, and should happen pretty quickly if it does set up. And then in return, gold should bounce off that support and go back up. And we'll see how it unfolds here. Got the scanner pushing away. It's responding a little off this strength. It's just in the wrong spot, that's all. This is vulnerable. We're only 2 points away from a possible trade setup here. It's never been back up to 2260 since it got slammed. And if the ticks rev up, the price action shoots up into those levels, and I will short it on climactic action, smaller time frame stuff. I'm going to go to a little larger time frame here. Keep an eye on the price action and the tick. That's a 1, 2, 3, 4 down, 1 over. 2, 3, 4 down, 1 kind of up. It recovered pretty well. Looking at this low in here, shook it out. Looking at this low in here, it didn't breach it. There's some resistance up in there. And this blew through the low, and then traded a little higher, shook out between this and the Dow. Looks like the S&Ps are the weaker ones. It's about 810. Oh, it should be 1010 or 1110. Central or Eastern time, that is. I was really hoping we'd get a push up to that 60. It's not out of the woods yet. It can, it sagged down a little. It could still go back up. But, definitely want to go short. Double top, boom, trapped it. So we'll take a look at the GLD. It'll be kind of the same as gold futures. They look alike. The GLD just happens to have a lot of gaps, but if you it's a better way to manage the risk. If you don't want to put too deep of a stop in, that gold futures can get pretty hairy. Yeah. 118.42. When it comes to the weekly chart or daily chart, I would wait for a sign of weakness to show up in there, and then I would take a breakdown of that sign of weakness. So into 2-bar reversals or up thrusting, put a short order right below the low of that bar and expect it to fail. But I wouldn't just put a resting order up in there. I'd wait for some confirmation of a bar first. Let's see if I find the gold here. The S&P just, the market just got slammed a little. Really correlates with that 1245 level up in there. Go to the weekly chart. Watch 1236 as well. As you see, that's 117 level, 116.80, 117.55. Any up thrusting in basically in the next week or two or days at any of these levels in here is a nice short opportunity. But that would suggest the S&Ps are going to recover and take off. We'll see what happens here. Right now, it's just coming out of some strength on the daily chart, trying to push the old top. So I would say, yeah, right about 113 level. It would be the trigger, which is real close to 112. It's good stuff. But yeah, definitely we'll see confirmation, then wait, as opposed to just jumping in the river and hoping that it turns. It's time to scalp, and then there's, you know, swing trades. I'll wait for a little confirmation. Few points, it's not going to hurt anything. You're scalping every little point counts because usually your stop's pretty close. I've never even thought about looking at RSP. Yeah, good stuff, Jim. When it comes to weekly and daily charts, monthly charts, intraday, there's time to scalp. You know, it's expected to work pretty quick. Wait for signs of strength and weakness intraday as well, but not all the time. SPY RSP, I've never even heard of that. What is that? Or is that just two different symbols you're talking about? Got it. Oh, it waited. RSP, let's take a look. I've never, yeah, what's it? Guggenheim is what it says here. There's so many vehicles out there, though. You know. Is this the one you're referring to? equal weighted. Got it. Pays a dividend. What's the volume on it? See what happens. You mean over lamb? Let's see what's going on here. Daily chart. Keeping an eye on the S&Ps. It's kind of rolling, isn't it? Immediately I see, uh-oh, it doesn't look too good. Pivot low there, still holding, but very suspect. Could breach through this widespread bar. Thanks for that, Robin. Yeah, breakthrough at 86.36. Got some support in here at 84.90. Still on an uptrend on the weekly. And a weakness on the monthly. Some supply came in there. No real push. Watch that pivot. Yeah, keep it on there for kicks. Watch it for a while. Chart is a chart, right? Just watch, see how it trades. Most likely it'll trade like the index. Good stuff. Yeah, Jim. Not all the time. Only when there's an increase in volatility and activity is when I scalp. But other than that, I'm waiting as well for a sign of strength or weakness on, say, the 5, 15, 30, 60-minute chart. So I'm fairly choosy about scalping when it comes to just blindly entering. There's got to be an increase in volatility there. There's a time to scalp and a time to be scalped. Awesome. Yeah, when this setup's there, I aggressively take the conservative setup, so to speak. And market's breaking down again. Let's see what happens. Watch that gold at 12.17. UK sessions, we're going to end here in about 8 minutes. Yeah, 2 15-minute charts up, that's good. See if it breaks down here, gets below this 54. I was hoping they'd push it to 60 and take this right down, but if they want want to take off without me, it's okay. I'll wait for it to plunge down, and then 54 and a quarter. And I didn't miss anything because I was waiting up here. My ride never showed up, so well, I have to hitchhike for a while and see if I can catch up to them. Just see if it drops through here. And just keep in mind, market sentiment for the day is negative on the S&Ps. That would be positive for gold, negative on the euro, and well, the pound is strong, but probably won't go up very far. And that's positive for gold. Positive for gold, negative for crude light. Watch gold break 1217 if this 54 gets breached. Though I know it's going to happen, I can't manage my risk accordingly, so I'm not going to just blindly jump in if it does break down here. But Smart Center Pro still looking for some signs of weakness. When they do fire off at key levels, I'll take a trade. 54 and a quarter. Let's see if it gets down to 51 and a quarter, 51.75. Yeah, it's always exciting to share that stuff, Lance, when you come across something that good and you know it works. It's like, it's one of the reasons I hang out in traders. When I was first trading and things started going well, I talked to people that didn't trade and they'd look at me like I was crazy. What in the world are you talking about? Yeah, it's nice to hang out with traders that do this every day, day in and day out. You just want to share that good knowledge and setups that you're coming across. Yeah, I tend to write and then rewrite it again. How can I make this sentence smaller? More to the point. Just keep it simple, and as you know, the discipline's where it's all about, what it's all about. Really what makes or breaks it. Just had the crude light fire off here. Let's see. It's a 1 minute chart of weakness. I'm not going to jump on that. Sometimes that happens. It all depends on your what's the word for it? Objective, I guess. Just remember, you won't be missing anything. And if you got a specific setup and certain rules in place, somebody might be looking at the complete opposite of what you're looking at. It doesn't mean they're wrong, because what they're looking at probably has an edge as well. There's more than one way to skin a cat, so to speak. As long as you're doing things consistently and doing the same thing over and over again. And you have an edge, and it's working more often than not. Another person could be looking at the exact opposite of, well, I'm just taking I'm going to go short here, and you're thinking I'm going long, and take your profits there, and go short at the same area where they're taking their profits. As long as you're winning, and if you come into a trading room environment with the perspective of, okay, I'll follow the trades along, the ones they take, and maybe I can understand one or two setups and hang my hat on that. And every time those one or two setups take place, I'll start practicing those. It'd be a good way to take advantage of the room, mimic the trades if they make sense to you, and then try to understand one, maybe two setups, and then just do those over and over and over again to master them. And if you've got some setups that are working for you already, and they correlate with the way you trade, nothing wrong with adding an extra one or two. It's just you got to realize how many setups you can manage. When I first started getting it, like, aha, you can see distribution accumulation pretty easy. I literally had 15 to 20 setups that I was trying to manage all at once. It became a little too, you start making trading mistakes. But yeah, it's really important to stay focused on, just doing the same setups over and over and over again, and try to block out all the noise. Noise meaning market movement and other people's opinions. Just keep your setups based on the facts that come to you. Good things happen. Yeah, it's easy to get excited when you're trading. Yes. It was my phone asking me when I was sleeping. Were you asleep at this time? Trying to make it a point to sleep 6 to 8 hours a day. NASDAQ stock. Shake out here on the 1530. It's kind of chopping. NASDAQ is blinking short on the 1 minute. It's right in the middle of a playing field at the moment. I will not be taking a trade at this level. I'll take a trade up here. If it breaks down and slices through, I'll take a trade over here. Things start setting up on the indexes, start searching around and look at a few possible setups on different vehicles. I see the accumulation effort to push back to that 53.05. That'd be the ideal short up in there. See, watch this. Gold's getting ready to pop out of here. How is it? It's a light volume effort to push shake out 2 up bars, came down, lighter volume than the previous 2 bars. Watch that break of 17.2. 1221 comes to mind. 1221, 1222, maybe some resistance up in there. Low of that bar is 1215.3. 1217.3. 1221. $57 on the S&Ps. This over. Try to get to bed before midnight. And usually I'm up about 3 in the morning. So if I'm in bed by 10, up by 4, that's good. Definitely got to sleep. When I was in Hawaii, I was trading at 12:30 in the morning, 1 o'clock in the morning. So the market really started moving. $56.75. Watching the S&Ps pretty close here on the other screen. Watching gold. Dow's minus 62. Some signs of strength here on the index, or the S&Ps in gold. That is, I'll get it right soon enough. With signs of strength on gold, and S&Ps are just kind of chopping. I have to see them get a little more decisive here. Watching that tick. This tells me how many stocks are going up versus going down. And it does affect the futures market. 55.75 on the S&Ps. Almost called it gold. I look at the last bar of the session and look at the close on that. Somebody was asking me about this V down here. It switches a lot. And I haven't asked yet. As I said, I don't know why it does that. There's a V here. I'm assuming it's for volume. But it'll change, this light blue thing. And I'm assuming that it's like a point of control. But you know what they say when you assume. when the pit closes. 10:30. It's 5.5 on the S&P. It's 5.25. Pacific Standard. I'm located between the Mojave Desert and Death Valley. In between the mountain ranges. And S&Ps are 55. And I'm long gold. Oops, I'm going to move my stop to a 14.7 at the moment. Looking forward to get up to that 12.22 level. I'm going to take a break out here. I got a 15-minute chart. Expectation the S&Ps are going to flush and push down here. Minus 71 on the Dow. See, the S&Ps are real close to the lows again. Let's see if we can get this thing to take a tumble here. Watch the index a little. Minus 71 on the Dow. Watching 55. Minus 70 on the Dow. UK closed already. About another 5 minutes on this bar. A little recovery on the index. Minus 65 on that. It's firmed up just a hair. on Buddha Bar and accidentally clicked on Bluegrass. What in the world? Music. Still watching the market here. I'm in a trade, so you got to monitor it and manage it accordingly. I'd like to see this drop out here. A couple minutes left on the hour. Actually, 1 minute left. My clock's slow on the computer for some reason. Okay, come on down. Not a lot of selling pressure, but indexes are still negative. No traction there on the S&P or the gold. That's a no demand bar. It's straight up on the light volume. The 30-minute chart still looks pretty strong. Still nothing there. 7.5, 17.5, 17.8. Really got to get moving. So see if the S&Ps will drop out here. It's teetering at support. Teeter-totter. I haven't been on one of those in a while. Getting what I'd like to see here on the indexes. They'll push further down, minus 74 on the Dow, but no flush. I'd like to see them break them pretty significant here. Yeah, if crude light comes off intraday wise, you would expect the indexes to do the same, and vice versa. If the indexes fall off, you'd expect crude light to do the same. There we go. Got a nice jump to the downside here. Let's see. There we go. 52. Low tick. See, gold's at 18 now. 51.75. Yeah, it's definitely, as long as it doesn't snap back aggressively, it'd be a nice short up there at 54.25. So I can see this thing get moving here. Pretty wild move to the downside. You gotta watch that bounce. Turn the music down a little. afternoon, Wayne. Yeah, right now I'm in long on a gold trade. Shorted the S&Ps early. He was looking for a re-entry, but never got it. Yeah, right now I'm eyeing that 54 and a quarter for a possible short opportunity here on the S&Ps. Minus 86 on the Dow. If it drops out, it drops out. It never came back yet. Wishful thinking. Watching gold is getting close to the old high there. It's into the 1220 level. Lock it in. The S&Ps will break. They do most likely get a pop up to 1220. There's a low tick. It's recovering just a bit. Some support in the market down here. 51 is a pretty key level, by the way. Got some key numbers over here. 51 and 48. And 43 and a half. Low this bar is 51.75. What I'm doing is looking for a tick follow through. Not quite giving me the price I want. 9 minutes left on this bar. I got to keep an eye on that 15-minute chart. Make sure it doesn't turn into a shakeout. Another push would be nice. Back to 0 on the tick. That's 84 on the Dow. Watching gold here still. I gotta jump in thinking I'm missing it. That's the last thing I want to do. Chasing cars down the road. And because I'm closing in on that 15-minute chart, I've got to be very leery about trying to scalp into this and let one run. If it popped up there, I'd add a couple and then peel out one and let it run. Get a swift move to the downside again, but it didn't quite make it up there fast enough, far enough. And if it breaks minus 800, all's well. Or minus 600 on the tick, and the lows get broken. Just have to wait again. Really focusing in on this price action and the way the stock market's acting. Minus 89 on the Dow. Minus 90 on the Dow. Negative 89 on the Dow. Minus 88, minus 89. Those are Dow numbers. So at 855. Should I try to scalp into this if it goes up to 54 and a quarter again? What do you think? 5 minutes left on the bar. Would that be the wise move? Try to take a scalp trade if it rushes up to 54 and a quarter now? Yeah, good stuff, Clay. Good stuff, Timothy. I'd be short and I'd be looking at a shakeout. Oh, can't believe that. Gold's coming back. S&Ps are pushing back up again. Be nice to see them sell into this up move. Minus 77 on the Dow. Yeah, so when talking about scalping here, when we're trying to catch that volatility and where they've trapped them pretty quick, it's got to keep in mind what the bar is about to do. If it's about to close into a shakeout, that's specifically on the 15, 30, or 60-minute chart. You're kind of going against the grain. Smaller time frames, not so much. Welcome back, Paul. Thanks for that, Robin. Yeah, good stuff, Aaron. Yeah, just wait. It's tens of thousands of trades in our career. Sit and wait for them. Right now I was looking for some weakness to show up at 54 and a quarter on the S&Ps. Holding gold right now, seeing how the S&Ps are going to react here. Just kind of break even on gold at the moment. Long. We might have saw that already though. And you get a low tick like this in the market, a lot of the times you'll see a shakeout on one of the larger time frames. Once in a while, it'll go to zero, and then take off again, and then the bottom will get broken. Next thing you know, we're running. More often than not, though, it tends to turn into a shakeout. It's the stock market. And think of it as a RPM gauge or a tachometer on a car. You step on the gas, all of a sudden it starts revving up. Expect the futures market to move. Because that's a shakeout on the S&Ps, I'm going to get out of that. I just closed my gold position break even. I'm not going to mess with it. There's an up thrust here. Had a sign of strength, right? Effort to push, sign of strength. S&Ps broke lows. This thing should have shot off and continued. Now there's an up thrust here and a shakeout there. I'm not going to sit there and hope and wish, because the market's not in my favor on gold. I can't lock it in. So I'm not going to hope and wish that it goes in my favor after seeing something that's probably not going to go in my favor. So, if this would have finished down and there was no sign of weakness on gold, I would have held, no problem. But right now, this thing's suggesting that I'm not going to take the trade, by the way. It's suggesting it's coming down from 12.617 down to 12.10 before it goes above this high here of 12.19.2. But the reason I'm not taking the trade, the Dow's down minus 75 points. S&Ps have got a trap move to the downside. Any signs of weakness that show up at 22.58, 22.60 level, this thing's going to roll over pretty aggressively and start selling off again. If that's the case, the S&Ps won't make it to the downside. They'll end up stalling out most likely around 12.15. Yeah, 12.11, 12.10 down there. But I don't think it's going to make it, considering what's going on here. The facts are telling me don't do that. So I'll wait. If the trade starts working, it's no big deal. So I'm not in it anymore. So it's not a trade. Made the decision to get out based on signs of strength and a sign of weakness. Two inverse things tell me don't do that. There's tens of thousands of trades in the career. That's one's not going to make or break it. It's no big deal. On to the next. With the sign of strength, I was talking about shorts at 54 1/4. I don't want to do that now. I want to see its weakness up there at a little higher levels. Unless it just completely reverses itself and closes lower here. And that's not happening. As you see, 60, 30, and a 15 have all hovered at that 54 1/4 level. It's got to get below 54.75. So there's some room in there. And close down there to prove itself. Yeah, I agree. It needs to push up there on that gold to show it effort to rise through that 12.11. Could turn out for the week, just all of a sudden, boom, thrust right back down. You're looking at an up thrust. But, yeah, we'll see what happens when it happens. As long as we're aware that we've got a probability and an edge by reading the supply and demand, but the market can do anything it wants. As long as we're aware of that. Manage the risk accordingly. okay with not being right all the time, because it's inevitable. It's going to fail once in a while. Minimize the failing and maximize the succeeding. Good things happen. Some nice setups there on the monthly chart. Actually, here's one I talked about in July. Could be like numbers on there still. And of course, they gap it down today. Let's go over here. It's on a different. I was going to show you something I did analysis on and talk about trade setups. Considering we're just sitting here waiting now, a few things. Monthly. Some Fibonacci levels here. It's kind of a clutter on the monthly, but a little hard to see. The Fibonacci levels aren't helping. It's kind of, but we've got a pivot high here on the monthly, a pivot low. I identified massive volume coming in on this widespread down bar, and it slapped it sideways. Now there's a shakeout. When it came back down to these old lows, it's a nice light volume push. Well, from 74.33 to 27.64, 61% levels, 56.49. Get a creek here. Look at that. Nice shake out at the creek. Off to the races. Triggers, and took several months, but I put the green line in here after identifying that. If it broke that 45.42 expectation, it's going to 56.17, because there's a trap move in the background at 56.17, and as you see on the Fibonacci, 56.49. So a nice confluence in there. And this was way back in July, June, July area. That's how long it took. Sometimes it takes that long to get there. It just finally got up in there. But a little patience pays off, and now it's trending up. But sometimes that does happen. Got a creek, effort to rise above the creek, and then a test or a shakeout. So for swing trading, you can identify the creek in the background, and then a test or a shakeout that comes back to the creek. Pretty powerful stuff. Got a camera up here top right. On paint it. It looks like this. Textbook stuff. You get that double bottom. It pushes up. And on that double bottom, you have the top in there. Pivot top. When it comes back to it, look for that shakeout. Or test, or sign of strength in here. That's exactly what's going on in this chart. There's the creek. There's the shakeout / test. The expectation was going to 56.49. Break it down on the weekly chart. At a stop at 38.21, right below this accumulation area, or right at it pretty much. Came close. They tried to shoot it down, or took a little heat and it took off. This stuff works. It's good stuff. So you just got to believe in it. And be a happy camper if you trade according to supply and demand as opposed to all those technical numbers. It's good to pay attention to, because a lot of other traders are looking at them too. And professional monies understands that, so they're going to do certain things around those levels and get them off foot. Them being not us. We'll be on the right side looking at what professional money's up to. Right now they're probing down into this shakeout bar, see if they test it or blow through it here. Market's at minus 84. Gold's not responding. It's still at 12.17.3. Oh, okay, yeah, it's a Richard Wyckoff term when I speak about creek. And a creek is an accumulation phase where it goes, get that widespread down bar. It has nothing to do with the moving average, by the way. You get a widespread down bar, and then all of a sudden it starts kind of slapping sideways. When it does go sideways, what I do is a rule of thumb, depending on, it's all relative time frame wise. But if I get 2 bars down, right here, 1, 2, from that pivot high. So now it's kind of iffy because it's going to be a shakeout. So you get 2 bars down from the previous low. Then I would expect this to be the possible top of the creek. You don't know until it's come down and starts to look like a bit of a double bottom. But anticipate before it happens, and you'll start to see things come to fruition. The expectation, okay, that's a creek. Now what they're trying to do is find where sometimes the creek's kind of wide and it narrows. And if you're somebody that's trying to jump that creek, you're going to go up here and go, oh, it's too wide. Oh, here's a place I can jump. Boom, they just jumped the creek. I'm running out of room here. When they do jump the creek, they like to pull it back and get a little drink of water because they're just got tired from jumping. A little drink of water and then continue the journey to the upside. That's what I mean by creek. It's an analogy based on, is there enough room to get through that level now? Or is it narrow enough? Is there lack of selling, basically? So it does one of these. Kind of wanders around and jumps. Say, aha, okay, it's jumped that double bottom. And when it comes back into those levels, you would expect it to fire off a long signal to the upside, then continue its journey. Matter of fact, I could probably, we're distributing right now, most likely, but I could probably show you something on the 1 minute. It shows up a lot. It's over and over on multiple time frames. Here's a little accumulation. Widespread down bar, massive volume. There's a high here, a low, lower low, lower low. So this pivot is a creek, but there's no effort to rise above it. There it is. Now, when it comes back to this level here, you would expect it to hold. It just tested there and bumped its head at that 54.75 and it's rolling back down. So there was the whole phase right there. You got the creek build, you got that double bottom, and there's the effort to rise. I wouldn't trade that. And then there's your shakeout. There's another one there. At the creek, you'd expect it to push. I wouldn't trade it because there's no room in there, and it's on a downtrend. But I could watch it as the market unfolds too, and talk about it bar by bar. It's rolling over now. There's distribution up here. But once you get it, you get it. Just to understand the accumulation distribution phases and what's going on in the background. And then pick a handful of bars that you like as signals. And good things start happening. Right now supply is showing up in the market as they probe down. Yeah, exactly. They're really good at trying to wear our trader out. It's a good question, Harry. I think I got a name. Actually, don't have an email. I'll have to ask Gavin about that. I've just been recording the sessions. Being recorded right now, so we have to be careful what we say. Just kidding. I'll ask them to shoot out. I'm sure they'll shoot out a link as well. Playing field is different. Playing field is key numbers. They're based off of where the traders got trapped off of, based on widespread bars up and down, typically. But a creek does point out where an area of support or resistance will be. So it would actually, in a way it is. It's a key number as well. So yeah, you could use it as a playing field. Exactly. Trigger number and the creek, aka trigger number. Hope that makes sense. They're pretty much one of the same. So I consider those areas a lot when I'm looking at trigger numbers, because that's when usually they're trapping them. Pay attention to those widespread bars, and you'll start to see everything pretty clear. But yeah, just salt the ice, buy the creek. It's an awesome way to go. That 54.75 was the old low. As we were talking, I just saw a test and effort to rise here. Let's see what they do with this, if there's an effort to rise through that. 54.75. 54.75 was a open key range number based off the open price. And as you see, it held twice and they sliced it through finally. I don't see any setups at the moment except 2260. Mentioned 58 earlier. Be a little more aggressive, but 2260. small double bottom, a larger double bottom. After it rise through here, you'd expect that to hold and then push to 60. We'll see what they do with it. You see that a lot, actually. Let me mark this up here. You see a double bottom in here, and you'll see a larger one here. Smaller time frames do that a lot. And then they jump. You see them on daily charts too. You see it a lot on small time frames. So, we're accumulating, kind of. Accumulate again. If you look for that stuff ahead of time before it happens, things will start to become pretty clear. If it doesn't make sense, just move on to the next one. It's no big deal. So sometimes they don't. Sometimes it's just a mess. I'm going to step away. I had a small trade in gold, didn't get any traction. Shorted the S&Ps early, but was waiting for it to go back and get some more. That didn't happen. It just fell off. But, we got a good game plan going out into the afternoon, specifically here on the indexes. And that would be a 2260 short opportunity. If it happens to break down and close lower at 2251, I'll look for shorts at 54 1/4. Gold's not getting any traction here. Even when the S&Ps did this, once they did this, I was expecting that gold trade to actually work. It should have went up to 1220 and then some. It was a good warning sign. It's, uh-oh, something's not right here. It's not quite breaking. So. And they shook it out, followed by what looks like a test bar. Actually, they go hand in hand when it comes to widespread bars. Widespread bars and high volume bars usually go hand in hand. But definitely interested in the volume spikes too. Yeah. So it's a combination of the both. Then I asked myself, well, what happened with those widespread bars? And where's that pivot in the background that were, if people were long and it sliced through to the downside? Where are those people that were long down there? And where's the block of orders probably going to start when it comes to selling, and vice versa? So it's both. Yeah, exactly. It's a coincidence. It's not a coincidence, actually, when it comes to trigger numbers and creeks and ice and things. There's definitely an intention there from the professional money to get people on the wrong side, and when the price goes back close to those levels, they're going to want their money back. They know that, so they'll put a bunch of sell orders back on the block of orders up there, back on the books. And, we'll start to see distribution phases and vice versa. They'll slam it down into a block of buy orders, and that's where we see those accumulation, is when we see the institutionals just sitting on the books there. Of course, they're keeping prices down too artificially if they want to slap it sideways. Artificially keep it up and sideways if they want to turn it over. That's where we see our accumulation distribution phases. So think about it that way. Every time you see an accumulation or distribution phase in the background, that's where there was a big block of orders. And if there was a block of orders back there at one point, there's probably some more in there. If you had hundreds of millions of dollars to get in and out of the market with, you'd have to be a little more methodic than just jumping in. It's you to cause a reaction. Mechanics of why. Trading, it's another story. I got to manage that risk. Less risk, more reward. Be right more often than not, and manage the risk consistently each time. And of course, manage your trade consistently. Because we're never going to be right, perfect. That is, you get out and the market keeps moving in your favor. You get out and the market went against you a little, and then you got out. You know, it's just one of those things where if you constantly question it, you're going to go in circles. So just have a way to get in and out of the market based on specific things that are happening, and repeat those things over and over again. That's good trading. So I hope everybody has an excellent afternoon, morning, evening, and we'll be back at it bright and early. Looking forward to some good trading. Some solid stuff we'll set up here. Got all week. And maybe it'll head up to that 2260 and give me an up thrust after all. Talk to you all soon. Take care.